if it can break through the, let me put this gray line right about on the market. If the market can break through all of this support, then you've got a decent chance of the market making a big move to the downside. But you also have to realize that you've got a month worth of support at that level. Okay, so the target, it's going to be tough. I'll put it that way. It's going to be tough for the market to break through all of that. If it is going to break through, you're probably going to see a very, very fast move. Okay, the market isn't going to just mess around. So let's go back here. Okay, so there was the move. The market, boom, immediately gets us into a short trade, continues down, and then now look, is immediately retracing. Okay, so let's recap this. And again, if you feel like I'm trying to discourage you from trading intraday, that's because most of you really shouldn't be trading intraday. So in the span of, and first of all, this move came very early in the morning outside of the sweet spot. But first of all, we've got two stops over here. We've been triggered into another trade, so we have a third trade here, which very quickly starts moving right back against us. So we have two losers, and we're in a third trade. Market rallies, depending on where your stop is. If it's over here, I should say just above this high, you're still in the trade. But you're in a losing position because you got in right down here. Market makes another go at it. You can see this is what you want to see if the market's going to break through, but look what happens. Momentum comes in and then boom, is immediately rejected. And this is why I'm saying intraday, using the moving average doesn't always work. You've got to observe what the market is doing. Again, I've covered a lot of these concepts in the weekly wraps and in various places, so I'm not going to rehash it here. Plus, I've been going for about half an hour already. So again, you see the momentum coming in. If your stop is above here because of the trend, in other words, if the market is going to trend down, it ain't going to get above that high. It's just the way trends work. Remember, trends mean lower highs, lower lows. So is this trend still active to the downside? Yes. When is the trend deactivated? If it breaks above that high. So we continue on. Boom. Market trades above the high. Right there you should say, okay, downtrend is broken. At this point, the best we have is mixed and the trend is over. So we have two losers and then one more loser over here. So 3 losses in a row inside of just a few hours. 2 hours, 3 losses. Let's go ahead and tally them up. There's 58 pips. 59 pips. So call it 120 pips in a couple hours of trading. Now, these should be small positions. So, you could be in a one lot, but still, that's $120 on a mini. $1,200 on a regular. $1,200 on a regular lot. So right now, the dollar loss is $1,200 or 120. This would be a regular lot. This would be a mini lot. So as we continue on, you can see as we get to the end of the sweet spot hour or sweet spot window, what happens? This is not a weave. Now, some of you might be saying, "Well, Mac, but look at how close these things are. Boom, it's crossing, it's crossing." I want to see the moving averages lay down like we see over here. Why? Because that means the range is tightening. I want to see the range go from this to this. I want to see it tighten fast and small. Because that's boom when you get the market pushing out. I don't want to see this. These are pretty big ranges. All you have to do is look back here.